Okay, good evening and hello and welcome to everyone to the 36th episode of Tech Tuesdays UK. I'm sure all of you had an awesome summer break. It's a real pleasure to have all of you attend today's episode. I'm Subhashar Ghosh and I'm the founder of Tech Tuesdays UK. Before I start, big round of applause for our host, Reed Smith, Tamara and team. And of course, some essential notes on housekeeping. The washrooms are right outside on the left. In case of any emergency, just walk out the main door and then on the road probably. Mobile phones at all times should be kept on silent mode. We are absolutely delighted to have you join us for yet another engaging session in our monthly knowledge sharing series. To those who are attending for the very first time, a very warm welcome. You're now part of a vibrant, growing community where ideas are exchanged freely and innovation is sparked through open and honest dialogue. Tech Tuesdays UK is a unique free-flow format where we do not have any moderation or prepared speeches or have any preset questions. We just spend over 90 minutes engaging in deep, unscripted, thought-provoking and authentic conversations around technology. We are still a startup phase and as we grow, we truly rely on your support. If today's session resonates with you, please help amplify our message, talk about us, share your takeaways, and repost our content on LinkedIn, YouTube, and Twitter. Our handle across all the platforms remains the same. That's Tech Tuesdays UK. As is the tradition, our team of volunteers will connect with some of you to capture your thoughts on camera with regards to today's episode. And these moments will be featured across all our digital platforms. So don't be shy, share your experience. Now, as you all would be aware, this evening we're organizing the topic on AI and financial inclusion. To drive today's conversation, we are honored to have an esteemed panel with us, represented by Andy Smith, founder of Luxjut. Andy, can you take your seat, please? We have Lok Mishra, board advisor at Revolut. And joining us all the way from Zurich, we have Martin Moeller, head of AI and GenAI for EMEA at Microsoft. Martin, you there?
I'm here, hello. I hope I'm not a big floating hat.
No, you look great. Thank you, Martin. So, thank you once again, and let's get started. But before I leave the floor open, I have one small request. As you share your thoughts or make a comment during the session, please do take a moment to introduce yourself. Just your name and the organization will suffice. It helps us to get to know each other better and continue our building this amazing community. So, Lok and Martin and Andy, over to you.
I'm hoping you can hear me. Very good. So good evening, everybody. My name is Andy Smith. I am a fractional or interim CTO, COO, well, anything with a C at the beginning I can kind of get away with pretending to be. I've been in financial services now for 30 years. Largely around lending. So I've had a variety of roles in organizations in commercial lending, in retail lending. And for the last 7 years, as I say, I've been a fractional and interim operator, largely helping organizations navigate their way through significant change. That change could be technology change or it could be general business change. I have, one of the reasons why Suresh asked me to be here, I have worked for an organization who were operating in the space where financial inclusion is a very key factor. So I've had some personal experience of that. And I'm currently also a non-exec director of a community bank in the south of England that focuses their customer base are largely... is that one not working? Oh yeah, that's right. It's gone off. Yeah. A bank that basically their customer base are not able to get banking services from the traditional bank. So it's something I'll talk about as we go through the evening.
Martin, you want to go?
And now I can actually see the setup. I am a floating hat. So anybody who watched Power Rangers as a child remembers this floating hat in the background, right? So besides charter members, Martin Moeller, I'll keep it short. I'm an ex-banker myself, however, joined Tech about 8-9 years ago. LinkedIn will know better than I do, looking after everything as was said in the introduction, That's nowadays to do with AI, Gen AI, and agentic for financial services across Europe, Middle East, and Africa for Microsoft. Now, besides what I do and who I am, maybe as part of the introduction, one thought that I just want to give in the audience that's been keeping me up recently in a lot of conversations that I've had, and that's one thing we seem to be all getting wrong about the topic of the day, and that's when AI equals agentic nowadays, which is an error in itself. There's far more to AI than just agentic, and just because AI was the question doesn't mean that agentic nowadays is the answer. So putting that aside for a moment, I think we're all missing a point that could be quite relevant to the financial inclusion topic tonight. And the thing that we oftentimes misconceive is that we still think of AI in the incarnation of agents as tools, but they're not. We think of them as tools, if we use them as tools, same way as we use Google, same way as we use an RWA, machine learning optimizer, for example, then we're going to use them wrong. Adoption will drop, output quality will be reduced. But more importantly, if we think about it the right way, it opens up a whole new area of opportunities to do things differently. AI is not a tool. AI is fundamentally a digital co-worker. If you look inside the company, it doesn't behave like a tool, should not be used like a tool. You need to treat it like a digital co-worker. There's fantastic studies that look deeper into the upside you get if you do. And when you look outside to the daily users, agents are becoming quickly our personal companions. And outside towards customers, that fundamentally changes how the rules of success look like for business. But on the inside with digital co-workers, that means we suddenly have a near zero cost, highly capable workforce that didn't exist before. And that means, and those are some of the most interesting discussions I'm having these days, and I'm just coming from a few this week. That's why I thought, as kind of introducing myself and leaning into the topic, I share this, that suddenly business models become possible that weren't possible before. You can venture into markets where it wasn't economically sensible to venture into. You can create offerings that didn't make any sense because expensive labor costs would be associated with it. And also for the topic of financial inclusion, suddenly you can democratize some of the most high value and therefore most gated financial services offerings that weren't possible before. So by way of introducing myself, I'm an ex-banker who's now in AI, and this is what's really keeping me up at the moment with digital labor and digital companions that we're all having. How does that fundamentally change, or has the potential to change, the financial services landscape that we're seeing today? And with that, over back to the room to Locke.
Thank you, Martin, for a lovely introduction and setting the stage. I am Locke. Unlike both of you, I'm not a tech guy, but I'm a banking business guy. So you will hear a lot of banking business lingo from me in that sense, and you won't hear so much of tech words and lingo from me. I have been with ICICI Bank for 28 years, out of which 22 was in India. 6 years I was the CEO of the bank here in UK. Right now I'm in the board of few companies and I advise few companies. So that's my current role. I would, just as an opening statement, I would say that this is a oft repeated statement, but I would still start with that, is to say that we often overestimate what will happen in 1 year and underestimate what will happen in 10 years. And that's a very apt description of what's happening in the financial services. So if you look at a lot of other industries, so we hear almost every, with a lot of frequency, the disruption it is causing to, for example, the media and creativity and advertising and some of those industries. And companies are feeling the impact already. And likewise, you see the similar challenges in few other industries, including tech industries. I heard a very beautiful statement, and maybe my friend can say whether it's right or wrong. They say that the new coding language is a new language called English. So I think massive changes that we are seeing. Is it possible to run a bank by AI in 10 years' time? I'm dramatizing it, but yeah, it is possible, because if you look at the banking world, and as Martin mentioned about trading is one of the high end of, you need a lot of sophistication in terms of software and capability and knowledge. Those are already getting disrupted in terms of variety of tools which are available. You have other functions which are in terms of operations, sales, wealth management, and all of that, where to allocate the risk assessment, the decision making, credit decision making. All of that, frankly, can be done by AI. And will it happen? I'm sure it will happen. It won't be as dramatic as I'm making it out to be, but it will have a significant impact going from here. I was reading a statement from a venture guy. He said that I've stopped investing in AI company, but I have started investing in companies which can use AI, because there are quite a lot of them. And the next statement he made was that I'm now looking to acquire a bank and convert it into a AI-led bank, so to say. So I think these are some of the things which, if you talk to a banker, we had a very interesting discussion along with Martin the other day, few months back, and a full room full of bankers. A lot of them were very skeptical. A lot of them felt that how it can be done. So, for example, there were questions like, if you decide who is responsible for that, though in UK you have senior managers regime, you are supposed to be responsible for various areas. Who, in case of a AI decision, would be responsible for that? And a lot of those kind of questions, a lot of skepticism to see whether actually it can be done and how much it can be done. But my sense is that this is not a thing which you can stop. It's like a wave, and there is no point in sort of trying to stall it. It's much better to flow with that and find business model which are more aligned with that. So with that, I will stop and ask Andy.
I'd just like to pick up something, Locke, that you were saying. So will AI pervade the financial services industry? Yes, of course it will. But AI is not a homogeneous thing, right? I'm old enough to remember when machine learning first arrived in financial services 35 years ago. And financial services has been effectively using AI, at least the machine learning part of AI, for 35 years. We've been using it in credit and risk assessment, in scorecarding. We've been using it in fraud prevention. So there's nothing new there. I think one of the reasons why two reasons why financial services will be late adopters of a lot of the current AI wave is, number one, because we already have it. And banks in particular will be very reluctant to throw away what they've been using for 35 years and replace it with something completely new. That's going to take a lot of persuasion. The second reason, which Locke referred to, is the regulatory framework. And we all know that the regulatory framework for financial services is the barriers are super high. They're there for a reason. And everybody who works in a bank, particularly the senior guys and the board, are very well aware of their personal and their legal, responsibilities and requirements. So the idea that somebody's going to write a check for tens of millions of dollars and say, "I'll just bring this stuff in," it's just not going to happen. So it's always going to be slightly behind the curve. But it's also true to say that financial services were one of the early adopters of machine learning even 35 years ago. Can I just come on to financial inclusion just for 1 second? Because I think it's an interesting segue. We talk about financial inclusion, and that's the title of the talk tonight. But the reason why we talk about financial inclusion is because financial exclusion exists. So what we're trying to do when we talk about financial inclusion is talk about how do we minimize financial exclusion. Now, the FCA, in their own surveys and their own data, point out there are 1.1 million adults in the UK who are unbanked, who have no access to banking services. And we're talking about the 5th or 6th largest economy in the world, and over 1 million people do not have access to banking services. Now, there's a whole bunch of reasons why that's the case, and we can get into those if that's interesting. But the opportunities around AI, in my view, are going to be largely around how will AI help those 1.1 million as they are today to access the services that they can't currently access today. And also, how will it help banks and other financial institutions draw some of those 1.1 million into their customer base? Because right now, the reason why they're excluded is because the way banks typically underwrite or they make decisions about who they want as customers, those processes and those algorithms are keeping those customers out. So how might those things change so that at least some of those 1.1 million can be included? And I think that's where we start to see this nexus of, will AI materially change the status quo around financial inclusion? Because unfortunately, that 1.1 million has been broadly the same for many, many years. So just a point.
Martin, you want to go?
I think one thing is, and I would like to get into the 1.1 million, I think the opportunity to change that with the modern technologies we were just talking about is huge. I'm not at all pessimistic about financial services speed of adoption, because actually they're the first adopters. Sorry to disagree there. Of agentic AI, not of machine learning and then deep learning. And the good thing is, I'm not here representing Microsoft, me, myself, and I am speaking, but when I do look into the data, and I don't need to ask 1,000 CROs to do a survey, given the massive market share that we have together with OpenAI, I can actually look at the data. Financial services is a single leading industry in the usage of large language models, whether that's in the kind of Gen AI incarnation or agentic incarnation. That's in Europe. That's the same across the different geographies. Even if I talk to our friends over at Google and Amazon, they're saying the same thing. So funnily enough, while we were a bit behind the curve when it comes to digital transformation, we kind of fumbled the ball on that quite a bit as an industry. It took us quite a long time to get our backsides up. When it comes to Gen AI and agentic, over the last years, our industry has been consistently the first, and now sizably in terms of the amount of money they spend on this, the way they're scaling this out, the biggest adopter of it. So just want to set the record straight on that one. I'm not pessimistic at all about that adoption. It's really what we do with it. I think that's the main point of our discussion today. Are we using it to optimize what's already there, or are we using it to rethink and think afresh?
Thank you, Martin. I think that's a very valid point. The fact that a lot of them are wanting to sort of scope it out and see where it goes. Just a couple of thoughts from my side. One is, if you look at banking, a lot of things currently are based on machine learning, AI, and all of that. Now, opportunity, if you really are able to use Gen AI, conversational AI, predictive AI, agentic AI, are huge. So just to give you few colors around what are the possible areas which could change. Today, for example, if you look at KYC, which is one of the biggest issue in the banking segment, just to give you a sense, even when I am a bank CEO, when I go to a banker friend to open the account, KYC is know your customer. So I'm very well-known customer. People know me very well. They still ask for 5 papers. And if you happen to be in India, you have to take a scan, and not only take a scan, you have to sign that to authenticate it's the original document. Now, there are a lot of ways in terms of use of technology that can give a much better certification of who am I, where I'm residing, what kind of transaction I'm doing, what kind of calls I'm doing, what kind of bills I'm paying, which can give a much better confirmation of me than to give a copy of the passport and stuff like that. So I think there are massive opportunity in terms of reducing the cost first in terms of a lot of this area, and that is where the financial inclusion comes. So essentially, if you look at financial inclusion, you talked about 1.1 million people in UK. There are about 1.5 billion people all over the world. So almost 20% of the global population, which is financially excluded. In India, we have done a great job of opening the account of a lot of guys. Are they financially included? there are partially included. So they have a bank account now, but a lot of them are still out of reach for example, lending. So even today, a lot of guys who lend to some of this segment will lend at a rate which are exorbitantly high, because the cost is high, the credit cost is high, and all of that. So there is a huge opportunity to really onboard the customer, have a much lower cost of onboarding because of use of technology. Credit decisioning can be much better, much sharper. You can arrive at a credit decisioning which is much more sort of robust by use of technology. And thereby you are able to financially include a much larger set of population. The two areas which are possibly going to be of huge impact. One is conversational AI. So one of the big things today, for example, again, in a country like India, you have a lot of languages and a lot of dialects. Today, if you use an app or if you use a call center, most of the time you find it frustrating. At least I find it frustrating, because it will have a menu option, right? You select 1, 2, 3. If you want a bill, you select 1. If you do this, and you are there on a call for 7 minutes, 10 minutes. If you are able to change it where you are able to explain your requirement in natural language, what you exactly want, you can do away with a lot of this rule-based thing, and which is frankly irritating most of the time, because you are different, your requirement is different. What machine learning has done is to create various segments. You are a wealth guy, you are a private guy, you are this guy, and all of that. And they expect the population within that segment to be homogeneous, which it is not, because each individual will have their own requirement. So essentially, through the use of Gen AI, agentic AI, you can move away from few segments to creating a customer as a segment, individual customer as a segment. You can hyper-personalize what that customer needs. So instead of going and saying, I want a platinum card, you can say that I want a card with a limit of $2,000 with this kind of restriction and this kind of feature. I want a lounge access. I don't want a lounge access. Today, you basically go and pick up something from the shelf of the shelf. This is what it is. So you first create a product and then sell the product to the customers without really worrying about what exactly that customer need. You can hyper personalize what that customer needs. I think again, the benefit of conversational AI is that one is it breaks the language barrier, and that's a massive thing for a country like India. Second is it breaks the barrier in terms of your digital savviness. Even if you are not that savvy, you can actually speak and get the work done. So I think the potential impact of some of this technology being used in the industry scale is massive. I remember many years back, and probably you would laugh at it. So in India, ATM used to be a novelty. It used to be something which the rich people will use, because Citibank used to have ATM and stuff like that. And when we wanted to democratize it, to say this should be the need of the hour of everybody, and the impact it had in the initial period, now people don't use it because now there are much more efficient way of payment in India. The usage has come down, but so there was a journey to make it mass market at that point of time. So I think a lot of this, for example, wealth management today, the private banking, a lot of those get constrained by the cost of servicing a client. Now, can you create a financial plan for a guy who is having £10,000 or $10,000? That's the benefit and possibility of AI. Can you give a loan of £100? And how can you make it profitable? Today, those loans are available. A lot of them are using technology, but the cost is still significantly higher, right? So can you create that kind of product for some of these kind of guys at a rate which is significantly better? Those are the possibilities of some of these areas, and those are the big impact item for Gen AI and agentic AI in this industry.
I absolutely agree, Law. And hyper-personalization, I think, is the silver bullet that I think a lot of financial services organizations probably need. The problem is financial services organizations are largely product driven, And over years, decades, they've developed standard processes because they operate at scale. And those two things are the exact opposite of hyper-personalization. Back to your KYC example, it doesn't matter if I go to open an account or you go to open an account or the King of England goes to open an account, the process is going to be exactly the same. The same documents, the same, the same kind of flow. The reality, as things do, our digital footprints are getting bigger and bigger and bigger. There's absolutely no reason why in an AI context, you couldn't have a personalized KYC process that essentially goes out and looks for the elements that make you unique as an individual and then come back with the right decision based on that, rather than asking for everybody's passport or everybody's driving license or whatever that might be. Coming back to financial inclusion, which is the flip of the same coin, right now a lot of individuals are excluded because they fail the standard process that was designed for other types of customers that are easier to include, right? So, but those people could still be very valid customers. It's just the process has to change. And if you take it to the extreme, you almost end up with a personalized process, whether that's a personalized onboarding process or whether, to Locke's point, it's a personalized product offering that is essentially giving you exactly what it is you need. The bank's only decision then is, can we make a profit on that product, the definition of whatever that product is. But it's turning the business model of the banks on its head, away from standard products and standard processes to individual financial solutions for individual customers. I'm not sure how ready most of the big banks are to face into that. That's an existential decision. If you get it wrong, the bank's out of business. And so a lot of people who run banks are probably not going to want to face into that decision. Martin, where does that leave you?
Well, it's never easy to change, and that's a leadership and a mindset challenge. So we're not going to get around this, and I think that's something we won't solve in the room, because there's this lovely saying, and I will at some point look up which book I read it in, so I can probably attribute it. It's managers do things right, leaders do the right things. And that's a fundamental difference. So this is a leadership challenge, whether they want to lean into this or not, and I absolutely agree with you. That's a big nut to crack, which financial services hasn't cracked in 30 odd years or so. It hasn't changed its fundamental business model. And there's a question: what incentives do we want to set from the outside? What demands do we want to put to the industry? What enablement do we want to give it? I know the FCA and others are even looking into different ways that can make it easier, from sandboxes to all the different things for banks to experiment. But putting that on the side, what I find encouraging is that we do see a very, very tiny percentage in real life banks rethinking the rigidity of processes that you rightly called out as kind of the bane of our organizations. And it's because they're realizing the fundamental nature of agents, of AI agents these days, is that if you give them an outcome that is to be achieved, they'll break it down into individual sub-goals, and those sub-goals will then have certain quality gates to achieve. That's why reasoning is important, by the way. OpenAI and others, and ourselves included, don't invest in reasoning models because we can put out a product that's called research. It's because reasoning is needed to break sub-goals into actionable items, and therefore for to make agents work in multi-agent systems. And then you choose the right tools as an agent to execute against every one of these sub-goals. So whether it's, I want to travel somewhere, that's kind of accommodation, itinerary, and then indeed flights, and then whether you choose the Lufthansa or the BA app, that's kind of the flow. And the banks that I see that have most embraced some of these agentic elements are now realizing that that ultimately means the end of business processes. Because the agents are dynamically assembling the tools they need, and whether they do ABC or CAB, or indeed, as you're suggesting, make a loop to D, that is something that really fundamentally we're thinking. And one COO once put it to me quite nicely, that ultimately when we talk through how can we do the credit underwriting process in a new way, And that kind of goes to the underwriting and KYC challenges that I've mentioned. I think on a credit side for corporates, that is even more pronounced. So if we can solve it there, we can solve it anywhere. The way these agents ultimately work is you give them a manual, you give them either a meta prompt or a system prompt, or you give them a database where they know this is how this bank does the process, and then they do their thing, same as you would give an employee manual. And he said, well, if that's true and we want to change the way that entire agentic system that runs an entire part of the bank changes, well, doesn't that make us a programmable company? Because we just change the instruction of the agent and suddenly the entire process changes. And that's where we are headed. So I'm not saying we are there. I'm, however, very heartened by the fact that there's a few banks, and these are not small fintech banks. These are at least 3 ones that I know, 2 out of Europe, 1 out of the US, that are very large and that are looking into this right now. I'm not saying they're there. The technology also isn't there, in all fairness. But that gives me a bit of heart to your point. Can we fundamentally rethink the rigidity of the processes and get to this n=1 process internally, which then enables an n=1 experience at the front? I think it will start there. You're seeing some UK banks doing that now, simply because when you do the experiences agentically, it means that you can turn low-value transactional touch points into high-value, more or less advisory ones, right? You're constantly transacting a certain thing, you're paying certain things all the time. We already see banks leveraging agents to jump in and say, when you're making this transfer, I notice you're doing this a lot. By the way, there's a cheaper option. These kind of financial well-being ones. So I think it will be driven from that kind of holistic customer advisory side come inside. So that's kind of one comment. I do agree to really democratize and include everybody. We cannot have standard processes because that's one size doesn't fit anyone. So point one, but I do see hope there. I find it interesting, the examples around the democratization of access through removing language barriers that I've mentioned for India. And I think that's true for so many places. There's so much illiteracy around, but people can still speak. They might not be able to read, but they can speak. And therefore, that removes a lot of burdens of being included somewhere. Another one that is, for me, adjacent to that is financial literacy. And that's not just in developing countries, also in developed countries. So few people actually understand how finance works. Witness all the many people that, with great lamentation, lost all of their money in the kind of GameStop share up and down trading during COVID, right? Educated people, teachers, many of them. I remember lots of news stories about teachers in the US losing their pensions because they jumped on some bandwagon. The same happened with Bitcoin. So for me, that part is not exclusively to any part of the world, but having the ability to really understand finance and therefore make more responsible decisions once the access points that we talked about is there. That's another big piece where I see AI being really able to help. And when I think about what Card Academy and others are doing on AI and agentic aided learning, I think that's a great inspiration. Again, it needs somebody who actually does it and brings it to the people. But I think from a financial inclusivity standpoint, that financial literacy one that we've been baffled by for so long, and it won't work in classroom learning when you've got a 20-hour workday and you've got only a few pounds, dollars, rupee to rub together. You're not going to spend an hour or so a week in a classroom to learn about it. I think that's going to be another big area that's going to be really, really empowering to a lot of people. But I'm wondering, it's the three of us talking all the time, which is lovely because it's great points. What about the audience? Just not that I want to be a moderator, but there's so many more people in the room, right? I only see 2. I don't see the room, but I'm assuming.
Hey, Martin. Hey, everyone. This is Kapil here. I just put some comments in the chat. I joined a bit late, but fascinating conversation. I'm ex-Microsoft myself. I was actually doing SPT, Martin. You may know what that is. Which is large deal making here for India, and fascinating to hear some of the conversations on where India is, because India, as the gentleman earlier said, has some unique challenges but unique opportunities that we are trying to solve at scale. Some of the things that really jumped to my mind and I shared here is that we have got an opportunity specifically in India with a big vernacular population. We have 28 plus languages that we need to figure out. And if you talk about financial inclusion, the biggest opportunity for you is in tier 2, 3, 4, 5, the smallest of the villages, where financial inclusion is still making its way. And one of the ways that it's being solved, and by the way, Microsoft has been a big partner towards that, is by helping vernacular LLMs that are coming out of India. One of them is called Sarvam, which is actually being supported by Microsoft. But they are able to bring chat capabilities in multiple Indian languages for NBFCs and micro-lending companies who are trying to work with small farmers, shopkeepers, and so forth. In fact, Sarvam came out of IIT Madras and really accelerated when ChatGPT came on the scene. So that's just one example of financial inclusion that's happening with AI. I think the other big play in India, which is slightly unique, maybe there are other countries like Brazil and so forth, but in India, we have a lot of NBFCs, micro lenders. We have payment merchants like Paytm and PhonePe, where you have a transaction that's smaller than $1 in kind of context. Now, these new age financial services companies are really charting the way for a lot of the traditional banking customers of ours to figure out how you can adopt AI. And I think we just briefly, there was a mention around risk and fraud management. Now, what's interesting, what we're seeing is that and I would not go into UPI, which is your kind of payment stack that's come out of India, where you can literally scan a QR code and make a payment. But essentially, because of the millions of transactions that are happening at any given point in time in India through these QR codes, and basically in milliseconds, you need to be able to tell whether it's a fraud or suspicious transaction. The likes of PhonePe and Paytms are now deploying AI models to track the transaction velocity, geolocation mismatches, or user behavior anomalies to be able to kind of reduce the real-time fraud detection as much as they can. I mean, these are all being tested out in the market, but these are being done by some of these new age financial services companies. So there's some good learning coming out of that. I think they are going to be leading the way in India, and a lot of banks are watching this closely to be able to then bring that into the mainstream. But we are some way to go, and they're going to let the digital natives and the fintechs to really adopt and own it, and then follow through. So just some thoughts there.
Thank you, Kapil. I think it's interesting thoughts. Sorry, we have some questions.
Hi, I'm Vince, ex-Microsoft and running a startup. Seems like we have some sort of Microsoft gang. Being on both the sides, because it's been a few months I've left Microsoft and I'm both in the industry, even the media, but I was part of a lot of financial industry strategic partnerships over there. I just want to touch on what you were saying, Andy, and I'm seeing Microsoft's side of the story in terms of data being looked at, that financial is an early adopter. I think you're both right. And I'm with you in this over here, because when you look at the process like KYC and customer care support, those are very low-hanging fruit that financial industry has gone and adopted, because those were more on the evolution side of where they were. Before they were agents, like people, human agents, then came RPA, then came bots, and now we have Gen AI, and adoption is immense. So I agree that there is a lot of adoption in financial industry over here. But I see your point of view. Anything that is business critical, running at the volume of, I don't want to even go to the scale of India, which is ginormous. I think I saw stats that number of financial transactions in India alone as a country exceeds Africa, Europe, which are continents. So that's the differentiation that we're looking at. But do we have enough penetration or reliance on Gen AI to do a transaction? By end of the day, financial industries, can you do a transaction between two parties? Whether it's B2B, B2C, everything's there. I don't think that reliability or that consistency in technology is there yet, right? Hence, when it comes to the absolute core banking services, I think it's a long way to go. And I agree with you that I don't think CXOs is going to write 1 million of checks departing from what they have versus what they're going, because it's so critical to the existence of the banking industry, irrespective of how the democratization happens. That's the essence of your business. You're gone if that doesn't happen.
I actually, in my view, is that we'll probably get to an AI end-to-end transaction long before we get to an AI end-to-end view of a customer. Because the transaction basically is obviously a very, very micro unit, but a customer is way, way more complicated, especially if that customer has multiple products. Back to your point about data, which is fundamental when it comes to, in my view, when it comes to how we view AI. So most banks have grown by adding products over time, and then they go out and sell those products to customers over time. But they've all struggled. Every single one has struggled with a single customer view, because those products that they bolt on, they usually bolt on with a different system. So we've got this classical view of islands of data that most big banks have struggled for decades to dedupe, to get completely accurate, to fill gaps. That problem is 2 orders of magnitude greater now in the context of AI, because if you feed an AI model with bad data, and I'm going to be careful with my language, that you will get very poor results out of the other end, right? So the imperative is to get clean data sources, but you're starting from a position where for the last 40, 50 years, big banks have not wanted to make the necessary investments because it's huge, but it's still huge. But now you can't ignore it. So I can see us getting to an AI transaction much, much quicker than an AI, consistent view of an AI customer.
So one potential alternate, which I thought was an interesting point, and which is a possible way it will play out, is because of all these issues where banks have really, so if you really look at banks are really horizontally and vertically deep. So they have all the products themselves. They are the manufacturer of a credit card, bank account, loans, all of that, and as well as they cover horizontally. If they are not able to sort it out, and that's because of hundreds of systems working in a big bank and the data is residing in so many places, they may still have a data lake and all of that, but it's not as smooth and efficient. One possible way it will evolve, in which we see some semblance of that, is the banks become a infrastructure provider and product provider, and the front end goes to a lot of the new guys who then essentially are able to see Andy as a customer and what all you need, and have a one view possibly, rather than having a product-based approach. Funnily enough, I think product silos are so strong in many banks. I don't know whether you have experienced, and I have seen some customer talk about it, is that in the same bank, when you go and apply for a mortgage versus a auto loan, you still have to go through the whole process once again.
Exactly.
Starting with your KYC, what you do, what is your salary. Yeah. It's funny. It's ridiculous, right? Yeah. So I think some of these things have to change and will change. A lot of guys who do not have any kind of legacy, we're talking about in legal firm, they are taking the lead to create some of those front end, and this front end then front the client, meet all the requirement, and the product is manufactured.
So here's the interesting response to that. The CEOs that I talk, the CFOs, CEOs, and CCOs that I talk to, all of them say their profits are dependent on the relationship with the customer. So if you give somebody else the front end, you're handing over the relationship with the client. The fear is you just become a commodity product provider, and all of the profit that you rely on to fund your large bank is gone out the door.
Yeah, that's for sure. Yeah.
But they've been saying this for a long time.
True.
Yeah.
Just to be clear, right? We had this disintermediation discussion when digital transformation came along in PSD2 and different other regulations, and the US has a different version of that as well. McKinsey came out with a wonderful study about 10 years ago that showed the revenue distribution front, middle, back of the bank, and indeed confirmed the biggest revenue chunk kind of sits at the front of the bank, or the willingness to pay, certainly a difference between willingness to pay and today's revenues. So we need to separate these. Where I see it different today is, firstly, it's not that banks have a choice. It's not whether or not the CFO says, yes, we're going to give our front end to, well, in the UK, or at least digitally, I'm in the UK, the Starlings, the Revoluts, and the different other players of this world. If you see just the openness that's already forced on banks, and even where the openness isn't there, when you see how today I can book my flight for next week, Wednesday, when I need to go to Munich, I don't have to book that anymore. ChatGPT agent can easily do that for me because it handles the Lufthansa interface quite nicely. So I don't even need to rely on API integrations necessarily if I want to use certain bank services. It's clunky, it's a workaround, but I don't think they've got a moat to defend on that one. And if we extrapolate the notion that everybody is going to have in 5-10 years, that's not the hill I'm going to die on, how many years it's going to be. A virtual AI companion, all of us. There's always going to be the Luddites. There's always going to be the ones that are wise enough to stay out of it. Like my better half, she's out of social media. She never bought into that, and she's much better off than I am. So there's also going to be those ones. But most of us are going to have these AI companions. Now, what we can already see today is the relationship that we're going to have with these is going to be much, much, much deeper than we ever had with these square things that are our phones. They never leave our side, but we don't really have a trusted relationship with those things. When you think about the fact that there have been people holding vigils in mourning for the death of GPT-4o when GPT-5 came out, when you read some of the worrying studies, Oxford did a great one together with Google about a year ago, the dependencies that are already evolving, and codependencies, in fact, the way that many people don't make decisions anymore without asking ChatGPT, and we are basically at the very, very early stages of all of this. These things are going to become the gatekeepers to all of our private lives and business lives. It's going to be talk to my agent. And everybody who's ever been in wealth management knows that business model. That's the business model of family offices, where the bank never sees the clients, they see the family officer. So we're basically going to get in somewhere there. So that is exactly the future that Luca was describing, where in a family office setup, in an RIA or EAM, depending on which nomenclature you take, independent advisor setup, the banks are basically for custody and for products, and the advisor front end is being handled by these independent advisors nowadays. So I do think there's a very high potential that these things are going to happen. When you look into the ChatGPT marketplace today, it exists already. There's plenty of custom GPTs, as they're called, that have been built to help you understand finance. Now, connecting that to a trading platform is then the easy one. So I do believe that the banks don't like it. I'm just wondering if in digital transformation they got lucky that it never happened, this disintermediation, because many parts of the technology weren't quite there. I'm not sure if they can dodge the bullet again this time around.
Having said that, and let's bring us back to the regulatory reach into the sector. I think most big banks will tell you they make zero money. In fact, they lose money on current accounts. Right? If I was a CFO of a bank and I had a free choice, I would literally close down everybody's current account. But the FCA would be straight on the phone saying you can't do that, right? Because you have an obligation to provide banking services to the nation, right? So if I'm a big clearer, I'm one of the big five, I can't simply say, close down this loss-making product current account. So coming back to your point about the curated individual if you take that point to its extreme and every bank closed down their current account, nobody would have a current account. It doesn't matter how clever the agent is. It doesn't matter how clever the AI algorithms are. If nobody's offering the product, then you're not going to get a bank account. So basically that regulatory reach, those regulatory demands on what products banks can and can't offer and how they offer it will trump what the technical solution or the technical kind of environment might suggest would be the way forward. So I think we've always got to keep that in mind, because that's going to be why in financial services, I think we're always going to be slightly behind the curve of what's technically possible.
Sorry, Gautam, before you go, just one comment. Martin, I don't know whether, and I found it very funny, I saw it somewhere that a lot of people today use ChatGPT, a lot of us, in fact. So the use of ChatGPT is huge among employees to do the work, but use of AI, agentic AI, by the company is not to that order. Mm-hmm. And as people use some of these services, if you recollect, one of the reasons where banks were required to move faster was a lot of this shopping thing when it started, you go and check out and pay and all of that. So a lot of banks were required to mimic the experience in terms of some of their services, because customer realized and say, oh, this is what I do when I buy from Amazon, right? So I don't know whether when people use so much of ChatGPT, they can go and say what the hell you are doing, in the sense that it's right available, right? So I think a lot of customer will demand that kind of service because they are so exposed, much more than the enterprise. So I think customer is much more exposed now compared to the enterprise in that sense. And they are using it for work in their personal capacity. So I saw an article where a lawyers say that they use it personal ChatGPT to draft, and they are not comfortable to use the enterprise, whatever GPT. Sorry, Gautam.
That's great. Just have a few comments here. So financial inclusion, coming back to financial inclusion, maybe it needs to be looked into not as an isolated thing, because there are other elements there as well. And there is some success story. Sorry to bring in India again. Look, you mentioned there as well, for the scale and what has happened there, right? So 2011, the bank account penetration was 40%, right? And the International Bank of Settlement said that to get to 80% penetration, it will be up to 2064. 2021, that was achieved. A success story. How did that happen? It didn't start with, okay, let's get everyone a bank account, because there are other elements there. So a few of the things we were talking about, without naming them, it's digital inclusion. Yeah. If you don't, solve that, in that case, it will be very difficult, right? With brick and mortar bank, you cannot reach that at that scale. The other thing is identity, which, so KYC is part of that, right? And then that was cost. And in India, for example, one of the thing that helped to achieve that in 10 years than 40 years was, for example, Aadhaar, which was an identity system, and the KYC cost dropped from 100 rupees, which is £1, to 3 rupees, which is 3 pence, right? Significant drop. And that drove, along with many other things, right? So just wanted to mention that. But going beyond the banking, maybe it's more close to you, Andy, going to lending, right? For the inclusion stuff. There still is a big gap in MSME lending, right? I remember a report from World Bank, I think it's a bit old, 2022-23, it was saying that the requirement for the MSME lending right now is around $8.9 trillion globally. And the availability right now is around $3.5 trillion, right? So there's a $5.2 trillion gap, and that's 2022-23. I don't know if it has increased or decreased. I have not seen any latest report in there, right? So I think this is where, because we are talking about AI, can help a lot, right? Because especially in MSME lending, and in countries like India, like Brazil, like Kenya, right, where traditional collateral-based lending will not work, has never worked, and in the future as well, it will not work. For example, in India, what do we call those? Kirana stores, right? They need some sort of inventory finance, right? Inventory financing. So in the morning, they will go to the big market to buy some stuff, they need maybe 10,000 rupees, and they will sell it by the end of the week, and then they will return it back, right? The cost to credit is huge there, right? So here, and again, the other elements are all those gig workers in India. They're a huge amount of, right? Those, they do quick commerce deliveries, food deliveries, and so on. They don't have collateral, right? So they struggle to get lending. So here, instead of collateral-based lending, because there's a huge amount of data available right now, right? Transactional data, behavioral data, so on, right? So data as a collateral-based micro-lending will be great, right? Because this is where AI can help to maybe, to do the risk management or credit checks, etc. And this is again not theory, right? Because I was talking to one of the startups in India. I think they were called Karma Life. They target these gig workers, right? So no collateral needed, because there's a huge amount of data, because in India everyone uses UPI, or they have been using Aadhaar for things, right? So they're using data at a collateral, have put some sort of AI layer on top, so that let's say, this microcredit, micro-lending decisions are taken based on that, and very, very quickly, right? Because everything is online. There is no brick and mortar thing. The other one is, which has done embedded finance in this inventory finance thing. I don't remember their name, Fin something, right? So those type of things probably will be very useful, isn't it, for bridging that gap? Because the gap, if 2023 it was 5.2 trillion, if I remember it, that was 14% of the GDP where, for the countries where these are impacted, which is huge, right? And with the traditional models, and I don't know how regulatory plays there, right? Maybe you will know it more. So it will be good to, understand a bit more.
Again, I'm not sure it's a regulatory issue. I think this is more because banks have established set processes for how they think about lending. The old adage is any idiot can lend. It's collecting the money back that's the trick, right? So, and the way the leverage works, it only takes a small part of your portfolio to go bad, and you've lost the whole portfolio, right? Now, what's really interesting is and I've come out of a world of structured finance. So traditional SME and retail lending, it's accept, decline, refer, right? So accept it's easy, it's obvious you accept. Decline is don't bother, and refer, let's think about it. Now, in the structured finance world, the philosophy is, what do we have to do to make this deal work? Right? How do we structure the deal to make it work? Usually you're looking for 3 exits. So the ability to repay, some kind of collateral, and relationship. And if you've got 3 exits, fantastic. If you've got 2 out of 3, okay, you can kind of make a call. I think the trick is going to be, how do you take the principles of structured finance and reduce them down to micro lending? Now, using human beings, that's basically impossible, right? You just can't scale that kind of approach to the way you think about a deal or you look at a deal. With AI, you absolutely have the opportunity to do that. So if you can train your underwriting models to basically approach every single micro deal, even down to $100, if you can do that using that three exit approach, I think you might have a more interesting way of scaling the ability to lend. You heard it here first.
Hello. So my name is Arun Roy. The conversation started with using AI to run business by itself, and it being agentic or just being AI is another thing. There was this research paper. I don't remember much about it because I just had a glance on it. Where in a simulation they were competing 3 leading AI. I will not name them, and they were given a task to run a business of a vending machine, and on the contrary, they were also looking how a human can do it. After a year or so, all of them were making loss apart from the human counterpart. And some top AI, let's say GPT and Claude, they were able to sustain it for 3 months, even though they were making money, but they were marking them as a loss. So I still have doubts in my mind on like how much access should I give my AI, like not even like enterprise AI, just my own personal AI, to have access to my money to use it, to sustain it. Let's say one fine day I'm feeling very lucky and I'm like, you know what, let's just invest in stock. Let's see if I can jumble or not. And my AI goes, how much you want to invest? I'm like, let's invest like all of it. And I lose all my life saving in it. Because if we all are literate about how gambling industry and everything works and how stocks work, they won't exist, because the chances of probability of them winning a lottery is around 0.0001%. So what's your take on it?
Well, I'm not going to disagree with you. And in fact, what I would say is, if you have an independent financial advisor and that independent financial advisor told you that they regularly hallucinate, are you going to carry on with them as a fund? No, you wouldn't do that, would you? So I think there's a long way to go before I personally, I'm agreeing with you, would say you take care of my entire financial portfolio. I don't think so. But Martin might have a different view.
Oh, no. Actually, surprisingly not. So firstly, I like that study. There was even a better one if you want to have some fun. Anthropic did one with its own Claude. It went very psychotic. It even called the police on its own people and tried to blackmail them after running a small vending machine for a month. So there's very good ones out there. So there's a couple of points in there for me. Firstly, let's take the analogy you just gave with would you go to your financial advisor if they told you they hallucinate regularly? Well, would you go to, I'm struggling to find something here, I don't know, to your news agent and let him invest all your money? Probably not either, right? No. So there's an important distinction here when we test these models. They're general purpose models. They're doing genuinely next token prediction. That's all they bloody do. Or next pixel prediction in a very complex array if you're having images made. They're not meant to be financial advisors. So I hear there's a lot that, oh yes, a GPT or different other models didn't perform well. If you give them a task they're not trained for, it's like giving a poor student that studied history and then asking them to do quantum mechanics. There is a whole way we need to go in order to actually build verticalized agentic solutions, and that's happening a lot at the moment in many, many different startups and many, many big techs and many, in fact, financial services firms. So firstly, I wouldn't trust ChatGPT with my money either, because it's not qualified and wasn't ever built for managing money the same way as it's not qualified as a therapist. And then people are wondering why the outcomes are so disastrous when you use it. Whereas Dartmouth University, well-known Ivy League university in the US, built a Therabot specifically built for therapy. Great results in a peer-reviewed randomized trial. So if you build them for something, then they can work. So that's point number one. Point number two is, and I'll come back to this notion of a digital co-worker or companion. They're not meant to do everything. They're meant to be tool using in the same way that we are. That's the fundamental definition of an agent. A Gen AI is all about content, whether that's text, images, code, doesn't matter. An agent is all about it can use tools. So instead of creating content, it can get things done for me. So if we bring this to financial services and have it investing for me, not only does it need to be a model that actually understands what investing is all about, feed it all the books of the Warren Buffetts of this world and whoever else wrote a good book about it, or your own manual if you're a bank, this is how we do investing. And it's very easily done, by the way. I just recently was back in London with a customer of ours. It took me half an hour to build a financial advisory agent by simply giving him a 3-page text prompt that tells it, this is how you do risk willingness assessment, risk capacity assessment, and then you assess and allocate based on that risk willingness and risk capacity different ETFs from our friends at BlackRock, because they are the ones that have their fact sheets very readily available online. So you need to instruct it. Secondly, it needs to actually be able to use the same tools any bank already uses today. It's not supposed to do everything itself, and there comes a big important risk management aspect, and especially we talk about regulation so much today. That's where a lot of mental frameworks need to be readjusted. Agents aren't supposed to make any decisions. They're not supposed to make investment decisions. They're not supposed to make onboarding, KYC, or any decisions. They're supposed to be a digital employee that uses the same tools, whether it's a machine learning tool, whether that's an automation tool, or just a click point checkbox tool. That means that it introduces zero net new risk, in fact, or near zero, So you still need to test it and try it. And so that's my second point, in addition to build a purpose-built model, not a purpose-built model, but you need to ground it in the language. I'm not saying fine-tuning. Make sure that the way you put it together as a financial advisor, it has the same amount of hands and can use the same tools that an actual financial advisor would use. It wouldn't make decisions itself. And suddenly, when you do both of those things, it can manage money quite well. Right? So I think there is an opportunity there, but there's a lot of misconceptions about agents and how agents should and could work. It's not like you just magically throw anything in any of these models and then it does magic. That's where a lot of dreams go to die and a lot of negative things happen. So I take the point, but I think for me, those two ones are really important. But the big macro point that you made still stands. There's a long way for all of this to go. Somebody needs to build these integrations. Somebody needs to find the right data grounding for an agent to draw on. This is how investing works. The interesting thing, though, is that while there's a long way to go, it might not actually be long in the sense of time. The average time it takes a large corporate today to bring an agentic project live, whether it's customer interface or for the employee, is 6 months. Right, so while there's a lot to overcome conceptually, I think it's very, very doable, but we need to recognize exactly the challenges you just brought up. The other one is, and that's the last one I'm going to make on this one, is these examples of can it run an entire business? There's a separation, right? You started out by saying any C title would work for you, right? If you're the CEO and you're the COO, very different roles there. Operating a business versus running it, very different skill sets. And of course, I know there are COOs that don't just make the trains run on time, they make them bigger, faster, and more amazing. But if you think about running the operations of a bank, and that's where your challenge already came. Well, Luke started with saying, can I run a bank completely agentically? And that's where this little side conversation started. I think running it, agentic operations, it executing, AI executed but human-led, I think that's a very viable proposition. So that's kind of the last one I would say, that nobody ever said it needs to run an entire company, make the investment decision, make all the decisions. No. Somebody needs to make the decision. Somebody needs to be either in the loop or on the loop. But the execution piece, that I think is very, very doable with the two caveats I said earlier.
Yeah, I think just to add, as of now, for some of these complex areas, the way it is going to evolve to begin with, at least, is more like your companion. You are a relationship guy, it is helping you. So a legal guy may use a chat GPT, but still has to review it. Unlike a lawyer who submitted to the US court and said that, and gave a case study, which was not actually the case. For example, even in medical field, today, if you have a good AI software on patterns, it can recognize a radiology report much better than a doctor. But sometimes it may err, so you still have to be seen by a doctor to finally sign off to say, yeah, it is okay. But the amount of time that a doctor need to invest on that, because 90% of the scan would be straight through, the doctor doesn't need to see those 90%, they need to see those 10% of the report. So as of now, for some of these areas, probably it will evolve like a companion. Before you have really, really robust model, which have been thoroughly tested and stuff like that. And of course, will it be without issues? No, it will have a lot of issues. The model issues, the biasness. You have seen yesterday somebody filed a case against Sam Altman for a teenager committing suicide. So a lot of these kind of issues would be there. And that is why it's important that you have to mature the model before you actually implement. You have that confidence level, the regulator have that confidence level, public have that model. So it's a journey which will happen for sure. Sorry, sir.
Me. I've been listening. Finance is not my topic. Technology is my topic. My name is Nitin Dahad at EE Times. I'm the editor and chief of EE Times. Today's story, it's a US publication. I interviewed the CTO of Microsoft Discovery, and talking about agentic AI. The one thing that he kept telling me is about using agentic AI for scientific discovery, but also it applies in any sector that you apply agentic AI, including banking and financial inclusion, I guess, is you're never going to get away with putting these agents in without having a human in the loop, at least now. And I think you all made that point just now anyway. So I think the point might be that if you take it back to the financial inclusion, I'm sure there must be a way of getting, in the UK, for example, those million people banked by using the right tools to assess the risk, to assess all of that, and then have somebody sitting at the top of that, a human, a team of humans, just to say, well, back in the 70s and 80s, we had bank managers who would say, oh, yes, I know that person, whatever. And you talked about KYC. It may be that, it's something that we need to introduce humans again, rather than just going all the way AI.
Yeah, I think that's exactly the nub of the issue.
And read my article, by the way.
I sure will. Just as a reference point, because obviously I spoke about the UK before, but if you go to Germany, where the culture of community banking, the Sparkasse and all of those, they've been around for 150 years. And they are centered on the relationship between the customer and the bank itself, or the branch, the individual bank branch. And that's a model that has gone completely in the UK, right, through consolidation over decades. But it also exists in the US. And there are other markets and India is obviously one where that scale is simply not practical. So it very much depends country by country, but there are perfectly functioning examples of where banking at small scale can work. And if you look at the relative financial inclusion stats in Germany, they are very, very different to how it looks in the UK.
Hi. I just want to kind of touch on
just before you comment. There seem to be a lot of Microsoft today somehow. Sorry.
Ex-Microsoft.
What wasn't me?
Ex-Microsoft. Actually, Kapil, who was called, we were working on a financial together as well. That's strange that we ended up in the same conference. Anyway, so coming back over here, I've been working in a startup now, verticalization of stats analysis. Wall-to-wall, Microsoft Azure, OpenAI, and everything, because ex-Microsoft, surprise, surprise. One of the things I want to touch upon over here, we achieved 95% of accuracy over 1 million queries. And it took ginormous effort to get there. However, one of the things that I want to talk about on the scale and democratization that we talk about, doing this day in, day out, the cost of per query. When you go ahead and do it at scale, and we try to touch 16 million concrete users, that was the requirement from our customers. As we are partnered with Microsoft right now. When you're trying to do it at scale, at that kind of accuracy, that people rely on the statistics analysis that you're giving, and we were doing statistical analysis, the cost is ginormous and exorbitant, even with all the discounts and all that. So one of the indicators of adoption that has not been talked about over here is the amount of cost per compute or per query is so high, even with all the subsidies provided by all the tech industry, is still not sustainable if you're trying to do verticalization of these agents at scale. And by scale, I've given you, we were trying to target 16 million concurrent users because that's the scale that we were given as a target. So there will be democratization, but I think that's a very, very interesting point that we have been back into. How do you remain highly accurate, highly trusted, but at the cost that people are ready to pay off? Because you're absolutely right. Current accounts is a loss-making function. So if it's at par, then is somebody even ready to pay that kind of cost away?
And Martin, I'm sure, is better qualified to comment on this than I am, but just one observation, our ability to innovate on the infrastructure is probably far quicker and easy and better than it is to innovate on the use cases. So I'd probably put my money on NVIDIA or whoever taking that next leap in chip design, or somebody taking the next leap in data center design, or whatever it takes to get that cost of compute, to continue to keep coming down, rather than, all the things we've talked about for the rest, which are the really hard things to do.
Yeah.
Only thing that for a lot of things, 95% may not be enough.
Yeah, you're right.
That's very true.
We still get pushback on that.
Yeah.
But, we take pride that all one.
Of course, yeah.
Sorry, I had a question, if I may.
Yeah, sure. Right.
Yeah, and a thought as well here. So what we're seeing is, certainly in this part of the world and in, say, Africa and Asia, fintechs are, of course, using AI on the back of UPI flows and merchant transaction to underwrite loans. What's the thought on banks starting to adopt, say, an alternative credit scoring model to serve new to credit segments? Traditionally, we spoke about gig workers earlier and thin file borrowers that are rapidly growing across the board. And traditional bureaus are not going to really be able to give them anything, but, they all have, e-commerce, transaction data, utility data.
Yeah.
So is there, to me, it just sounds like we need to be thinking of expanding the lending to that section. And yes, they may be probably bigger in Africa and Asia, and of course India is a big market, but it could benefit a lot of other economies where they're there. But is that something already happening, or that's still a distance?
I think that was a bit the point earlier, with banks being very rigid about their processes and procedures. And there's only that amount of data now, I always need this and this and this. So I think that's a mindset challenge we need to overcome. But yes, I believe that's the biggest and easiest way to drive financial inclusion. When you think about, there are examples, there's not for financial inclusion specifically, but using alternative data for credit assessment. A company was using, what is it called? AdviceRobo. It's a startup that's well invested in, and they have a bit of a complex naming for it. They call it psychographic risk scoring, which sounds like whether or not you kind of move glasses around to say, is this a good customer or not? But in reality, they actually automatically augment internally with external data. Spark Beyond is another company that does that and then runs complex machine learning models on top of that enriched data set. And what they have achieved in a number of different banks is basically increasing the lending customers they were able to actually make a decision on whether they were willing to take the risk or not still, right? But before they were default, no, by 30%, and 12 to 15% lower default ratios on the entire book on top of that. So I think that when you just look at that alternative data, I think that's a really, really important point. If banks are willing to embrace that and trust the models. Another one is where I've seen a lot of banks doing it out of necessity when they have what you would call a thin file problem. That is, they're going into a new segment where they just don't have much data historically. And there are still banks expanding into new segments, into new areas. And they had, there was a case for a new bank founded by an existing bank, and they were going into small, medium enterprise, solopreneurs in particular. I think that's some of the elements that also go very much into financial inclusion. And there wasn't anything, any data they could buy in, any data they had on these solopreneurs. They only had about a 10% prediction accuracy of the default likelihood, which no CFO is ever going to sign off on. So in about 4 months or so, they did exactly what you said. Can we use alternative data points with very good modeling to make highly confident decisions? And they went up to north of 90% of confidence on the default prediction, and suddenly they had a viable business. I do believe that is very, very true. And there's, especially in developing countries, and everybody please keep me honest here, when you think about phone usage and different other payment histories that you have, there is so much richness of data. If, and I'll come back to Ellie's point from earlier, banks are willing to let go of some of the rigidity, and I think regulators also have a part to play in giving them more leeway and a bit of a safety net, that if they are embracing this for the sake of financial inclusivity, then they're going to get a few breaks when it comes to the reporting, the modeling, and all the rigidity of underwriting that they normally face.
I think in addition, I'll give you a concrete example. Customer behavior is important here as well. particularly when we're talking about financial inclusion. So, for example, the community bank I referenced previously, customers were coming for loan. We're talking micro loans, right? A few £100s. But on a traditional underwriting process, the answer was always no, right? Because there was no history, there's no collateral, whatever. So they introduced a product called Save to Lend or Save to Borrow, right? So basically the customer behavior was, if you save with us a certain amount per month for, let's say, 6 months, and you do that consistently, then at the end of that 6-month period, we will be willing to lend to you an amount, a multiple of the amount you have saved. Because what have you done? You've done two things. You've proven that you've got affordability because you've been able to save the same amount per month from whatever income sources you've got. So you've proven affordability, and you built a collateral buffer. So therefore, when you then come to underwrite the loan, you've already got 2 of your 3 exits. You've got affordability, you've got collateral, and you built a relationship with that customer. It's not just a random person that's arrived through the door. You've got somebody that's been there for 6 months. So if customers are willing to change behavior and how they think about their needs, then on top of the regulatory changes and on top of the bank changes, then maybe you can move forward with some of those things.
Just add something in there, because there was a question that Kapil was asking that is it only happening in the sub-Saharan Africa or in India? It's happening in Europe and US as well as alternative data. So I'm the co-founder and CTO of Secure ID. That's our main business as well. Right? So I can't name it, but the tier 1 banks here in UK and also in US, they are using the mobile operators data as alternative data and a machine learning layer on top of that, which is providing, kind of liability less decision, saying that good, bad, ugly, red, amber, green, right? To facilitate the decisioning of the banks, right? Is it regulated yet? Of course not. But I think the regulation will catch up. So a recent example, which is not in banking yet. So the online safety bill, which was passed in UK 25th of July, I believe, right? So it started to regulate, which was going through the exact same trajectory, alternative data for age verification, right? Because otherwise it was very, very complicated, right? So now when it got regulated, this alternative data got regulated as well. Now the same data source and the exact same path, right? So mobile operators data, machine learning there on top is actually now regulated. I believe similar thing will happen here as well, because in reality it's happening. It's not just in, India, Southeast Asia and Sub-Saharan Africa and Latin. It's happening here because, you cannot just rely on the regulated way of taking decisions. Right? Things have moved on. So so KYC is at a big risk actually. So I remember in 2023 June, CEO of LexisNexis, he said that the reliance on these static, very old collateral-based KYC is at risk because GenAI can create those data and these synthetic identities that biggest fraud right now. True. Right? So you cannot just use some process and method which is not appropriate right now, right? So that way it's happening right now, but maybe it needs to be talked about a bit more, and at some point it will be regulated. We take that very much.
A new area to just ask a few questions. I chair UK Telecoms Labs here in the UK. We do testing for cybersecurity and things like that. But what I'm keen to do is to pick up on the regulatory side of this, because you said very clearly, Andrew, that the regulatory view has to be taken into account. I think that's correct. There are other regulatory industries as well besides financial services. But in your case, I'm interested in what the regulators may wish to do to see more adoption of financial inclusion, to see more adoption of better KYC than we have today. So what messages do you have to the financial services regulators to improve the adoption of AI for good purposes?
That's a big question. First thing I would say is I think regulators, by their very nature, don't tend to tell firms how to do something. They tell them what outcomes they expect to see. And as long as you understand that principle, there's no point waiting for the regulator to tell you what's going to happen. They're not going to do that. So it's really around creating the boundaries and the environment within which firms can operate. And actually, I think the FCA is very clear, the PRA as well, very clear around what those boundaries are. We've had the whole thing around customer duty, very recently. We've got the whole thing around operational resilience. We've increasingly got a lot of regulatory focus on third-party outsourcing, cloud providers, data providers, etc. So I think the framework is there, and it's kind of up to the firms to test the boundaries of what that framework looks like. So I personally, I don't expect anybody to be able to go to a regulator and say, tell us what you think we should be doing. You're not going to get an answer with that question. Is that what you were?
That goes part of the way, but in my experience in telecoms, we knew going to Ofcom to say, have you seen this? Would get an interesting discussion going.
Yeah, okay, now that's an interesting one. So I was at a conference a few weeks back, and one of the Bank of England, one of the senior people at the Bank of England who look after this area was at that conference. And what she was talking about, and I heard somebody mention it actually earlier on, the Bank of England have their own sandbox environments, and they are very happy to discuss what they're looking at in those sandbox environments and talk about how they can interact with firms and what they're looking at. So I think there is an increasing willingness within the regulatory space to compare notes, to talk about the kind of things that they're looking at, but it doesn't cross the line of saying, we will now tell you what to do off the back of that.
And rest assured, I'm not asking them to tell you what you should do, but I'm asking to make sure they raise their knowledge about what's happening in the international scene, to say, if this is offering more financial inclusion or better KYC somewhere else, that those lessons can be taken on board internationally. And have you seen becomes an interesting scope for change, maybe trials and demonstrators first, for example.
Yeah, exactly. And I think there's an element of that cooperation going on with the EU, so with the EU regulators, because of course we had that close connection previously. I'm not personally familiar with how more broadly that goes, but there certainly is interaction between some of the regulators on the continent and here in the UK.
I think it needs
There's
to be more
another point,
visible.
and then he was referencing the German Sparkassen earlier, and that it works slightly different in Germany, and the level of financial inclusion is much higher. And then please keep me honest here, but being in Germany, I think the Sparkassen have a very different business model than a regular Main Street bank. They are not, because Sparkassen in Germany, they're kind of small community banks. Every state has some, and every state has multiple ones. They are part owned, if not wholly owned, by the individual German states. Mm-hmm. And they've got a very different mandate. So now why am I saying this, bringing this back to the regulatory side of things? In the UK and in most other jurisdictions, banks are private companies. They are mostly stock market listed, so they do have different other incentives. And I think that's the other piece of things. So what can the regulator do to make it interesting and not an additional risk burden to embark on all of these changes? I think the regulatory side to make it permissible is only the necessary but not the sufficient condition for banks really embarking into that one. I think the regulator or the government bodies more general, if they are serious about financial inclusion, need to also think about those kind of systems. How can we make it interesting, relevant, or at least not a downside risks for banks if they're testing these things out and are embarking into these otherwise kind of low margin segments?
So I think that certainly in the UK, the regulator will tell you that they are agnostic to the commercial model that the individual financial institution might have. So the regulations apply to the big, FTSE listed banks. They apply to credit unions that don't go anywhere near the FTSE. They apply to community banks. So I think the regulator would not view that they have different rules for different commercial structures. Rather, they're focused on the outcomes for customers, irrespective of the institution that those customers are working with. I'm not a spokesman for the regulator.
Broadly, in addition to the regulator.
Sorry, say that again, Martin.
Hence my notion of it's about government more broadly in addition to just the regulators. So there is something that I think regulators can do. How do you calculate RWA and what kind of requirements do you put on different kind of lending books? We already have that. There are certain differences by customer type already that could be possibly explored. But I would rather mean beyond the regulators, if I take the whole government body in and of itself, regulators being one part of it, yes, they do need to make sure that you are allowed to and can safely explore that. I think the bigger government part needs to be taken into account to that one. What do we do? Whether it's tax breaks or whatever you have. You think about the telco sector you referenced earlier, there's different ways that the government is leaning in and making things possible on those ends as well. I just don't think that economically anybody is really incentivized at the moment, besides not being regulatorily safe, feeling safe, being safe, different things, to actually venture into these financial inclusivity spaces.
So that brings us to the end of the 36th episode of Tech Tuesdays UK. Of course, thanks to Lok, thanks Andy, and of course, thanks Martin for joining us late in the evening. I honestly speaking, I was a bit apprehensive today, given the number of headcounts, because as I said earlier, a lot of people are still on leave. They're yet to join back office because of school holidays. But as a thing, it really sort of turned out very, very well, and it had its own sort of momentum and engagement. So really glad to have all three panelists and a great number of sort of guests out here. Before we wrap up for the evening, some quick pointers. Of course, some of you, please stay back for your bites. One good thing happened in the past 1 week. We've launched our own website. Why that's important? Because now the whole website is pretty comprehensive, because you can not only register for the forthcoming episode of Tech Tuesdays, you can also catch up with the old episodes. You can also see the galleries, and in the event you would like to sort of direct connect with any of the mentors or the panelists who've been part of Tech Tuesdays so far of the last 36 episodes, you can probably set a time and have a one-to-one session with them. And sooner, very soon, probably next 10 to 15 days time frame, we'll also sort of going to launch an AI bot on the website, which probably help you address a lot many queries that you may have specific Tech Tuesdays UK, as well as all the content that we've generated over the last 36 episodes. Yeah, so stay tuned. Moving on, the next episode of Tech Tuesdays UK is happening on the 30th of September, where we are launching a new format called Tech Tuesdays UK Mixer in partnership with GSMA Foundry, which is right across the Bank Station. We're trying to focus this very specifically on innovators, startups, scale-ups, and investors in general. So while all of you are most welcome, please also share this piece of news with your contacts in the same domain. This will be followed by Tech Tuesday in October and November and December, everything else. And last but not least, to know more about today's episodes, as with the forthcoming episode, follow us on our website, LinkedIn, WhatsApp, and all of the digital touchpoints and channels that we have. Thank you once again for being here. Enjoy the evening. We've got a bit of refreshment right outside. So yeah, that's it for now. Thank you once again. Bye.